So, what is going on with the real estate market? Is it a buyer's market? Is it a seller's market? Is it going to crash? Is it going to go up? Well, as we've talked about before, real estate prices are affected not just on the buyer side, but also on the seller side. If prices go up and interest rates go up, there may be a huge drop in demand. There may be a large number of people who aren't willing or able or can't afford to buy houses at the higher prices. That doesn't necessarily mean prices are going to crash. In fact, the real estate crash of 2008, 2009 didn't happen because prices went up. In fact, prices didn't even really go up that much. They went up a little bit, not as much as they've gone up here in the last 2 years. The reason that prices crashed in 2008 is because there were too many sellers versus buyers. There were people that had bought 2 or 3 or 4 houses on speculation with variable rate loans and no income verification, no job verification, no asset verification, and they weren't entitled to these houses. They couldn't afford them. And when the chickens came home to roost and the interest rates went up and the variable rates reset, people had to get rid of their houses. That's what crashed the property market in 2008. Now it's different. Prices spiked up. However, there's not a whole bunch of sellers out there that need to dump properties. There's not people who have 4 or 5 houses that are renting it out or that we're just trying to flip them in 6 or 8 months. The people who own homes right now, more than likely, are primary residents. They have low interest rates. They bought when the prices were cheap, right? They bought in 2017, 18, or earlier, and they have a lot of equity. They have low mortgages, either a low rate or even a low principal amount. So what you end up with is a standoff. You have buyers who are not willing to buy at the higher prices, and you have sellers that aren't willing to sell at lower prices. Why do they need to sell? You have a place to live. It's a decent house. You have a low mortgage payment. Why sell? If you have an extra house, maybe a rental property, you can get a lot of money for rental right now, right? The rental rates have gone up. Airbnb rates are high, so there's no reason to sell. Certainly there are exceptions to this. There are some people that need to move to another city for their job, although, as we know, that's less likely too. More people are working from home. You're going to have some people that maybe it's an extra house in the family. Somebody died and they have to sell it. That may happen. But even in that case, nobody needs to desperately sell. People aren't doing fire sale on property because it's not like the housing crash of 2008 where people needed to dump properties to avoid bankruptcy. These are people who have some equity in the house. Remember, the price drop needs to have 2 willing parties. It has to have the buyer who refuses to pay X amount of dollars, and you have to have a seller who's willing to sell at a lower price. Just because buyers want to pay less doesn't mean the sellers have to sell. And that's what's happening now. According to many experts, the property market is in a stalemate or a standoff because buyers aren't willing to buy and sellers aren't willing to sell. Now the question is, who's going to win, right? Who blinks first? Well, think about it. Who's more desperate? Who's more desperate? Somebody who owns a home that they have equity, low mortgage payment, and really is not financially distressed, or somebody who's renting and their rent just went up and needs to buy a house, right? Think about where there's more desperation. Not whether it's right or wrong or what the prices should be. That's a whole nother story, a different discussion. But who is more likely to be more desperate? The sellers who are sitting on equity and a low mortgage payment, or the buyers who are tired of mortgage or rental prices going up and not owning a home and having to live in substandard properties? It's more likely that the buyers are going to find a way to buy that house. In fact, part of the reason that that's more likely too is because there's still a shortage of homes. There's not enough houses to go around. It's going to boost up the price. You probably won't get a spike from the average price right now of 460 some odd thousand. It won't spike up much more than that, but it's also not going to crash down more than likely. A lot of people say the prices have to go down to make it affordable. That's true. But who says it has to be affordable? That's going to be the problem. It's very likely that real estate has become unaffordable. In fact, in the auto market, the official news is now new cars are only for rich people. Middle class can't afford new cars anymore. the average price of a new car is $46,000. If you get a 5-year loan at current rates on a $46,000 car, it's $1,000 a month for a car payment for the average car. That's not a luxury car, not a Ferrari or Porsche. That's an average car. The average new car price is $46,000. So if a car costs $1,000 and it's out of reach for middle class, maybe homes are going the same way. Maybe single family homes are not going to be affordable for middle class average person anymore or anytime soon. If that happens, the housing market stabilizes and people who have more wealth, people who have more affluence, they buy the single family homes that are 300 or 400 and up, and maybe some condos, lower price homes, and apartments go to people who have lower income. So this property market, people are waiting for it to crash like 2008. It's possible it never happens. It stays where it is. Maybe it doesn't go up too much more, but maybe it just turns into houses are not for the everyday person anymore. Drop your comments below. Let us know what you think. And remember to do the math as you're looking at whether or not house prices are going to crash or not.